Good morning and thanks so much for joining in. You're watching All You Need to Know on NDTV Profit and my name is Alex Mathew. Let's start with the headlines. HDFC Bank's ADR falls almost 7% as the company reports disappointing Q3 results. Margins continue to be a concern. U.S. markets end lower and bond yields rise. The 10-year yield rises above 4% after Fed's Waller says there's no need to cut rates quickly. Asian markets remain under pressure as investors await key economic data from China. Japan's Nikkei resumes its rally after a day's pause. The RBI governor makes a strong pitch at Davos, says India's growth story is built on a strong foundation. And Fitch reaffirms India's credit rating at BBB- with a stable outlook, says the rating is underpinned by robust medium-term growth outlook. Now, U.S. equity markets ended the day lower with all the benchmark indices closing in the red. The yields once again moved higher with the 10-year moving above 4%. That's based on speculation that Wall Street's bets on aggressive Fed rate cuts have gone a little too far. As of now, remember, the market is expecting as many as 6 rate cuts. But overnight, Fed Governor Christopher Waller appeared to push back against those market expectations. And he said that with economic activity and labor markets in good shape and inflation coming down gradually to 2%, he sees no reason to move as quickly or cut as rapidly as in the past. Meanwhile, the early rises in the Asia-Pacific region started mixed with the Nikkei 225 in Japan trading higher by about 1.5% and the other two trading lower. In fact, at this juncture, you have the Hang Seng that is also opened sharply lower by about 1.8% as well, and the Chinese onshore markets trading with cuts of about 0.5%. Let's turn attention now to India, though, and talk about the entity that will likely result in a shift in the markets today, or will determine the course of the markets, at least today. We're talking about HDFC Bank, and we're talking about its third quarter results, as a result of which you have the ADRs that were down about 7% overnight. But why? Why is there a bit of a disappointment? Vishy is joining in to tell you exactly that. Morning, Vishy. What, according to you, are the top elements to focus on this morning?
Morning, Alex. So the asset quality front, things are looking stable at HDFC Bank. The net profit actually beat estimates by analysts who were polled by Bloomberg. However, the disappointing bit is the operational front on the top line of the business. So the net interest income for the bank rose just about 4% quarter on quarter, while the expectation was close to 8%. So that's, of course, a disappointment. And this is coming on the back of a slower deposit growth. If you look at where the deposit growth is for the bank, that's about 2%, 1.9% on a quarter-on-quarter basis. So despite a slower deposit growth, which would imply a lower interest expense, you're seeing a dip in the growth numbers for NII. You're also seeing the net interest margin remain stable at about 3.4%, which the market expected, of course, it to remain at that level. However, the adjoining commentary from the management has not been that strong. If you look at the credit deposit ratio, which is the one ratio that currently is in the eye of the analysts, because the Reserve Bank of India is also supposedly raising this issue with banks, that is at over 100%, close to 110%. And on the LCR front, which is the liquidity coverage ratio, which is the free liquidity that is available with the bank, even that is at about 110%. So it's not like the bank can rely on the excess liquidity on the balance sheet, and the bank has to push forth on the deposit growth. Now, if the deposit growth does pick up suddenly in the next quarter and in the coming quarters, you will see that NIM number start to compress again. So that's where the analysts are in terms of their outlook of HDFC Bank's future results. The problem is also on the branch network. There, HDFC Bank has said that it's going to open about 1,000 branches. Now, that's, of course, lower than the normal 1,500 branch network commentary that the bank has been giving over the last few quarters. So that's what we're looking at HDFC Bank during third quarter results. Back to you, Alex.
Thanks so much, Vishy, for breaking that down. In fact, what are the implications for the Indian equity markets with the disappointing quarter for HDFC Bank, considering the kind of weight that it has both on the Bank Nifty as well as on the Nifty 50? To give you some indication of the cues from the F&O space, Agam is joining in. Agam, indications are that it will be a bit of a weak start today. What can you tell us from what you're picking up on the F&O side?
Right. So to give you a picture, HDFC is about over 10% weightage on the Nifty and a third of the weightage on the Bank Nifty. So it's going to be a significant one when it comes to its implications, the kind of reaction that we can expect as far as indices are concerned. Yesterday, we saw unwinding as far as the Nifty goes, even as the underlying came off by about 0.25%. And we did see a lot of traders take off their positions. Even in terms of the Bank Nifty, while the index remained flat, we saw unwinding as far as your open interest is concerned. So it did seem like at least a quarter of the market seem to not want to carry on the longs any further, at least not before the earnings of HDFC were out. But in terms of the options market, remember that yesterday we went in and out of the 22,000 mark as far as the Nifty is concerned. And on account of that, a lot of traders took that as an opportunity to go ahead and short your higher level calls. So we did see an increase in 22,200, 22,300, 22,100 calls as far as writing is concerned. Where does that leave us in terms of your overall open interest distribution picture? We still have maximum open interest in the 22,000 put, which still may serve as a little bit of a support, but a lot will depend on the kind of earnings that we see through over the course of the next few days. And of course, the 22,500 call is the one with the maximum open interest. Today is also the Nifty Bank, the Bank Nifty's weekly options expiry, and which is why we will have that particular index also in focus. For now, we are looking at a significant amount of writing as far as call is concerned, as you can see here. 48,300, and on the higher end, 49,000 call. I reckon the 49,000 call has been written, keeping in mind, well, not just this week's expiry, that is today, but also the next week. Let's move on and talk about a handful of other, counters. And of course, we did see longs building up in Nalco, BPCL, Page Industries, and L&T Technologies, on the other hand, saw shorts building up. In terms of stocks which saw unwinding, let's pull up that list as well. We did see Apolita and Coforge see longs and wine, but short covering for Biocon, Chamal Fertilizers, RBL Bank. But that said, once again, Alex, I reckon that traders will now see what the first 1 hour trade can pan out for HDFC Bank as well as Bank Nifty. And after that, we'll potentially see the kind of trend that the traders want to take them and how they want to take the markets forward.
The other pack that we're focusing on this morning is the IT pack, in fact. And incidentally, you also saw sharp cuts for the Wipro ADR. We've got LTTS that has reported its third quarter earnings. Just trying to figure out, Agam, so you've looked at the numbers. What stood out to you?
Right, so it was largely an inline quarter. We saw about 1.5% growth sequentially when it comes to revenues. We did see about a 20 basis points improvement in its margins. And all in all, we did see a substantial growth in its telecommunications and high-tech segment that now contributes to as much as quarter of its revenues. And a third of its revenues come from transportation. That has also seen about a 1% growth on a sequential basis. So a lot of these factors are playing in favor of L&T Technology Services, but we must also remember it is also one of the more expensive stocks on the street as far as your IT companies go. And that's the reason why we've seen a little bit of consolidation play out as far as LTTS is concerned over the course of the last few months. The question is, where does this company go on from here on? And it's also had its fair share of challenges with respect to the U.S. economy, considering a substantial portion does come from North America. So we'll be keeping an eye on that one as far as LTTS is concerned, Alex.
All right, thanks so much, Agam, for breaking that down. Remember, we've been bringing you coverage from Davos. The World Economic Forum is ongoing, and in fact, it was an interesting second day at in the snowy Alps. And we've got several corporate voices as well as political voices from that forum. And Neeraj has this wrap of the key highlights from the second day.
Well, this is day two, a wrap on day two of what happened in Davos and what happened particularly on the NDTV network. Now, interesting takeaways. One, if you walk across the promenade, you will see that the India presence is not low, but is toned down a little bit. There are enough and more state pavilions. There are enough and more company pavilions out there as well. And there are enough and more people asking about what's happening within this companies. Like, for example, is Indian IT doing big things in AI? And if you look at a couple of corporate pavilions of the Indian IT companies, you will see a distinct mark of AI being there and very impressive. So that's part one. Part two, you saw Indian hospitality out there, by the way, tea being served, other aspects being served. So that's the other thing. But more importantly, in terms of conversations that happen out here on the NDTV network, everybody from the Jeffries country head and Mahesh Nandurkar, so Ashish Agarwal, Mahesh Nandurkar, or the global head of investment banking at JP Morgan, or for that matter, we spoke to Peter Wozer of ABB, all talking about the possibilities of higher investments in India. In fact, the point that was made by Jeffries was that they believe that 2024 could actually be a landmark year in terms of FII flows and even FDI flows, because both the depth of the capital markets as well as the hunger for corporate FDI seems to be at a high. Peter Wozer of ABB was of the opinion that India will compete with world organizations, not on the low-end manufacturing, but on the high-end manufacturing. So that's a slightly differentiated view that we got, and you should catch the interaction tomorrow on the network as well. And last but not the least, from amongst the people that I spoke on the promenade off-air, enthusiasts who are out here at Davos from India, smaller corporations, startups, etc., very, very constructive on what's happening within their companies and the kind of atmosphere that exists for funding, despite the fact that we are looking at higher interest rates currently. So that's a wrap on day 2. Turned out to be a pretty interesting day of conversations. I'm sure day 3 and day 4 will be the same and possibly more. Stay tuned on the NDTV network. Thanks for watching.
All right. Now, we had a conversation, rather Neeraj had a conversation with Rajiv Memani, where he said that the India story got much more reinforced this year at Davos, and he feels that last year was a much more bearish sentiment. Here's what he said.
From a global standpoint, if I was to compare it with last year, I think the mood last year was much more bearish than where it is today. I think people were discussing whether we'll have 1 quarter of recession, slowdown, or 2 quarters, as compared to, and you know, it hasn't been the case. I think things have worked out not perfectly, but not as bad as what people thought it will be. So this year, I find people are, I wouldn't say they are bullish, but they are probably feel that things will start picking up. The interest rate cycle is coming down. Inflation is coming down. Geopolitics is still a concern. AI still, which way it will happen, is a concern. But overall, I think people feel much better. Europe feels that they'll probably do better than where they did last year. U.S. feels probably they'll be a bit slower than where they were last year. Some pockets of Europe, like Germany and others, may go through slowdown. So that's a global perspective. From an India standpoint, I think last year also the Indian story was very strong, but I think it certainly got much more reinforced this year, because the growth this year really stands out as compared to global growth. People are also seeing whatever was committed in the budget. Actually, we've probably done better than that. So overall, I would say things are very, very positive from an India standpoint.
And as always, you can catch that entire conversation on the website ndtvprofit.com and indeed on the social media platforms. We have to slip into a very quick break. There's more on the other side, so do stay tuned. Welcome back. You're watching All You Need to Know. We've already discussed HDFC Bank and LTTS and the IT pack, but there are a few more stocks that you should watch out for in trade today. And Varsha is joining in to give you some perspective on the latest there. Morning, Varsha. What is on your list today?
Good morning, Alex. So let's start with Adani Green, where we have business update for Q3 FY24, wherein a company has reported over 14% jump in sales year on year, and also it has reported pipeline of almost 2 crore smart meters with contract value of more than 25,000 crores. And company has sold almost 2,400 million units. Also, if you see the distribution loss stands at 5.46% in Q3 FY24 versus 5.6% last year. And it has awarded a contract of 2 million smart meters with contract value of 2,300 crore. Also, if you see, a company has received LOI for Khavda pooling station, and it has operationalized Kharghar Vikhroli asset. Then we have PNC Infratech, where it gets LOA for road construction project worth 1,000 crores in Bhopal from Madhya Pradesh Road Development Corporation, and companies to build Western Bhopal bypass as 4-lane project with 40 kilometer in hybrid annuity mode. Also, if you see the construction of the bypass to be completed in next 24 months, and as on 30th September, unexecuted order book stands at almost 18,000 crore. And it expects a growth of 10 to 15% over FY23. Also, then we have GR Infra Projects, wherein its unit executes concession agreement with NHAI, wherein the agreement is of 1,000 crore 4-laning project in Uttar Pradesh, and project is to be completed in next 730 days. Also, the operation period is for 15 years. And if you see the recent projects that company has bagged in is LOA from REC Development and Consultancy Limited, where it will build a transmission system in Raigad, and the project is worth 41 crore, and project is to be completed in next 2 years. So this is all we have got.
All right. Thanks so much, Varsha, for bringing us those details. Ultratech Cement, GMR Airports, as well as Godrej Properties, all of them, there are updates on them to talk about as well, and we've got Mihika to tell you about all of that. Morning, Mihika. What do you have for us?
Morning, Alex. So first I'll start with Ultratech Cement, which is incorporated new wholly owned subsidiary, and this is in Meghalaya, and it's called Leighton Valley Cements. Now the company will carry on limestone mining in the area as well as manufacturing sale of cements. The cost of acquisition, the company has invested around 1 lakh rupees, and this is divided into 10,000 equity shares, and the company has an authorized share capital of 10 lakh rupees. Next, moving on to GMR Airports Infrastructure, they released their December 2023 traffic data. Now, the total passenger traffic was at 1.1 crore, which is 15.3% year-on-year growth, and the total aircraft movement stood at 68,095, which was up around 8% year-on-year. Now, the highest passenger traffic was at Delhi Airport, where the passenger traffic stood at 66.24 lakhs, which was an 8% growth. Indonesia passenger traffic and the aircraft movement saw 2% and 10% year-on-year decline respectively, while as the Philippines passenger traffic saw the highest growth of 23%. And lastly, we have Godrej Properties. Now, on December 31st, 2023, the company had informed that they had acquired 4 acres of land at Yeshwantpur, Bengaluru. Now, the company has acquired additional 1 acre of land at the same place. The development potential of this area is 1.4 lakhs square feet of saleable area, and the company plans to build premium residential apartments in this place.
All right, thanks so much, Mihika. Let's focus in on earnings now, and we've got ICICI Prudential Life Insurance to look forward to. Monal is here to tell you what to focus on. Monal, what are the key aspects here?
Morning, Alex. With LIC making the kind of comeback that it has, I'm sure all the life insurance stocks are feeling the pressure, at least the private payers. Also, the regulatory overhang seems to be what is going to be impacting all of these insurance-backed stocks. So, the Bloomberg consensus has pegged the ICICI Pro's profit estimate to be at 272 crore. KR Chokshi has said that AP is expected around rupees 1,900 crore, up 3% year-on-year from Q3 last year. And VNB is expected at around 544 crore, which would be lower than last year, 12%. VNB margins are expected to be around 29%. Now, one of the key monitorables here would be the VNB margins, because the non-par policies came under scanner, the above 5 lakh policies that came under scanner are now going to have an impact on the margins. They were high margin policies. Also, the share of ULIP ownership is kind of increasing in the product mix for these life insurance companies. So that is one of the key monitorables of how VNB margins are going to be moving year on. The growth commentary of the company of what are the sectors that are going to, and what is its growth strategy and expansion strategy is also going to be one of the key monitorables to watch out for. Apart from that, persistency and cost ratios are also going to be something that we need to keep an eye on.
Right. Thanks so much, Monal, for breaking that down for us. Asian Paints is the other large company that you should watch out for in on the earnings front today. It's going to be reporting its Q3 earnings today, and we've got Mahima joining in to give you some perspective on what to expect. Mahima, what are the key expectations?
Right. Morning, Alex. So the key expectations would be that Asian Paints is poised for a robust performance for Q3. We can expect single high digits revenue growth and double digits probably profit growth. If we talk about the numbers from the Bloomberg estimates, we can expect revenue to grow at 9%, EBITDA around 16.4%, and net profit is set to grow at 23.3% as per the Bloomberg estimates. Now, what can you expect? You can expect double-digit growth in terms of volumes. You can also expect that because of the deferment of festive seasons and wedding in the third quarter, the volumes are going to grow well. We can also expect some kind of improvement in the rural demand and government spending, and monsoon deficit will aid the volume growth overall. And margins will improve on lower input costs because crude prices have gone down in the past quarter. So top three things to watch out will be top line and bottom line growth, volume growth, and raw material price trends.
All right. Thanks so much for breaking that down. Let's focus on the last pack of earnings, and these are companies that have reported their Q3 numbers. We have the likes of Hathway Cable as well as ICICI Lombard, Gallant Ispat, and ICICI Securities to talk about. Harsh has got all of those numbers for you. Harsh, over to you.
Well, yes, absolutely. Let me start off with Hathway Cables. Good morning, Alex. We're looking at revenue, which is up roughly 5.5%, but EBITDA is up just about 2%, and therefore you've seen a margin compression coming in there from 16.85. Margins have come down to 16.26. Your profit, therefore, has seen a bit of a knock from 28.77 crore. It's come down to 22.4 odd crore. So that's on Hathway Cable. Quickly moving on to ICICI Lombard. Again, a bit of a miss here, even though the numbers overall look quite strong. You're looking at net premium income, which has gone up around 13.5% year over year. You're seeing solvency ratio also rise to 2.57 versus the 2.45 number, but the combined continues to remain slightly elevated, 103.6. Even on an adjusted basis, adjusting for one-offs, the combined is still above 102.5 odd, and therefore your net profit has come in at 431 odd crore versus the 352 crore number. While it's up 22%, it's still a bit of a miss. Let's look at Gallant Ispat as well. Revenue up 5.5 odd percent. Margins have also gone up, which is a positive, and profit has more than doubled from 21 crore to 52 crore. That one will definitely be in focus. You look at ICICI Securities, revenue up 50.5% and net profit also up 67%. A bit of an operational efficiency play which seems to be playing out there.
All right. Thanks so much, Harsh, for bringing us those details. That brings us to the end of this particular edition of All You Need to Know. Lots lined up in just a bit. Up next is India Market Open. This is NDTV Profit.